Hello friends, in the series on the income tax cases, today we will discuss a very important issue where the assessee deducts TDS at the rate of 1% for property transactions and files form 26 QB by going to the website of the income tax department, and at the time of filing the form 26 QB, the portal does not demonstrate any hint to the assessee that this PAN is not linked with the Aadhaar number. So whether in that case it can be presumed that the PAN is not valid, or in other words it can be said that the deductee has not furnished the PAN to the deductor, and whether the liability of the deductor raises to 20% in spite of 1%. This issue has been taken up by the Honorable Madras High Court in the case of Harsha, Sunil Shah versus Assistant Commissioner of Income Tax, CPC TDS. This case is reported in 478 ITR at page number 413, and the date of the judgment is 19th October 2024. Friends, this case is a classic example that taxes can fall on any person without his fault, and the extent and the amount of that taxes can be so heavy that it can really bother a honest taxpayer who is doing all his duties diligently. So nowadays it becomes very necessary that the assessee has to be very cautious while complying all the tax compliances. In the present case, the assessee has purchased a residential property. While registering the property, the assessee has complied with the section 194 IA, under which he has to deduct the TDS at the rate of 1% of the property purchased. The assessee has did that. The assessee has filed form 26 QB by going to the income tax portal, and when he was filing the form 26 QB, there was no indication that the PAN number of the deductee was not linked with the Aadhaar number. After that, when the property was registered, and in the present case it was also a fact that the deductee has also given his PAN number at the time of the registration of the sale deed and submitted the copy of the PAN number with the registrar. But after that, the CPC TDS examined that when the tax was deducted on that particular date, the PAN number of the assessee was not linked with Aadhaar. So he created a demand of 19% plus interest. In the present case, the 19% demand was coming 10,64,000 and the interest was coming 10,640. The assessee filed the writ petition in the Madras High Court. The plea of the assessee was that in the present case, when the assessee was filing the TDS return in the form 26 QB, there was no indication that this PAN is not linked with Aadhaar, and at present the situation was that the deductee has linked his Aadhaar with the PAN, has submitted the copy of the challan which is to be paid for linking the Aadhaar with the PAN not in time, and it was the plea of the assessee that the assessee is aware of section 206 provisions, and when the court analyzed the provisions of section 206, the court said that there is no denying the fact that there is section 206 AA subsection 1, which says that if the deductee does not furnishes the PAN to the deductor, then the deductor has to deduct the TDS at a higher rate of 20%. And there is section 206 AA subsection 6, which says that if the PAN is not valid, if the PAN does not belong to the deductee, then it will be presumed that the PAN has not been furnished by the deductee, and the higher rate of TDS of 20% will be applicable. But the court said that in the present case, section 206 AA subsection 6 will not be applicable, because in the present case the PAN number was not valid, because the website of the income tax department has accepted the TDS of 1%, and there was no indication that the PAN number was not linked with the Aadhaar number. So from the facts and circumstances of the case, it is very clear that the there is violation of principles of natural justice with the assessee, and the demand was quashed by the Madras High Court. Friends, this case is very important because it gives a very clear message that whenever you are doing property transactions or any transaction, or you are deducting the TDS of any person, then first be ensured that his PAN number has been linked with his Aadhaar. Otherwise, you can land into a very difficult situation of enhanced demand in the form of TDS. At the end of this video, once again, I am repeating the name of the case. The name of the case is Harsha, Sunil, Shah versus Assistant Commissioner of Income Tax, CPC, TDS, and this case is reported in 478 ITR, page number 413, and the date of the judgment is 19th October 2024. Thank you, friends.